Good morning. Welcome to Forex in Four. Today is Friday, August 5th, 2011, and I'm just not even going to try and sugarcoat this one this morning, folks. We'll just jump right in. Today is Non-Farm Payrolls Friday, first Friday of every month, where we're going to get the jobs report, and that's going to be a tipping point here today, and it's going to let us know whether we continue this decline that we've been in, or whether we're going to be able to get some relief to the upside. But what we're looking at right here is we're looking at a 1-hour chart of the S&P 500. Okay, this is off the CFD chart. Okay, and you can see here yesterday the massive selling that took place in the S&P, and right as this first level of resistance here, which had been acting as support right around 1250. Once that got broken, okay, we just went into free fall, and right now we've got the S&P sitting right about smack dab at 1200. Now I just want to stretch this out a little bit. All right, and let's look at this just on a daily chart here real quick, and you can just see this massive selling that's taken place. All right, and we're looking right here. We've got a little bit, I don't know if you can see this, a little bit of a doji, and we're showing an extremely oversold area. All right, and we're sitting right ahead of the daily pivot S1 support at 1175. But guess what? That's still 25 points away on S&P. That's a pretty decent number to go. But you can see here that we do have a little bit of support recently. Well, not so recently. This is last year, actually, down at the 1175 area. So markets are very ugly at this point. Well, why are we looking at the S&P? We're talking about Forex, right? Well, this is very important because, you know, we know all about the correlations in the market and what tends to happen. All right, so we're looking at the daily here, the euro, and despite the big sell-off in the euro and the problems that we're having around the globe, primarily emanating from the eurozone, all right, you can see that euro is still holding 140 at this point, which is basically the S1 support on the daily charts. All right, we can go back here and take a look. And you can see that you know, the euro sell-off was combined with dollar strength. Now, what's happening in Europe? Well, they're you know, really starting to sweat this this debt crisis, and for as much as they're sitting there saying we don't have a problem, we don't have a problem, we don't have a problem. Well, guess what? They do have a problem. One of the problems is that you know, they basically did nothing for a year and change after the first Greek debt bailout, and they watched as the bond market and bond vigilantes just drove interest rates so high on these countries that, you know, now all of a sudden they can't, you know, refi, and they can't refinance and roll over their debt because it costs too much, and the interest and debt service is way too much for them to pay. So I don't know what the heck they were doing over this course of time, but that's probably when they should have been providing relief to these countries to try and get these rates down. So, you know, now they're going to be tested, ECB, if they're going to come in and do some bond buying, you know, as they just, you know, said that, yeah, we've got this package, you know, a couple weeks ago, and now all of a sudden it's in question. And I think part of it is that, you know, when we see what's happening around the globe, Germany's kind of going, you know, hey, wait a second. You know, this doesn't look so hot anymore. So it's going to be interesting, to say the least, what's going on. So yesterday we obviously had flight to safety. There was dollar strength happening. All right, we can look. I want to look at here at dollar yen, because you can see dollar yen. Here was the intervention, okay, which weakened yen, but boom, sure enough, markets come right back, all right, and they start buying up yen again for that safe haven property. So we're sitting just above here, 78, let's call it, and that's happening. And then let's look at the Swiss franc as well. Yesterday, Swiss franc made new all-time high versus euro. I said the Swiss franc. Oh, there we go. Thank you. Let's look at this on the daily. Okay, I can show you this on the daily chart, and you can see here, euro tanking versus Swiss franc. All right, here we are in the daily. And as that pulls up, I'll just tell you that overnight they had CPI data that came in Switzerland. Let me move this out so you can see it a little bit better. And it actually came in lower than expected. So prices are coming down in Switzerland, and they're not actually worried about inflation, which I guess is a good thing considering they just lowered interest rates. So that was their response to try and, you know, stem the tide flowing to the Swiss franc. But with all the stuff going on in the market, you know, it's very difficult for them to deal with a very stronger currency. So you can see overnight Asian markets followed U.S. stocks down. They were got clobbered. Okay, you can see Aussie's been selling off here. All right, this is the daily as well, and 110 to 105 in a few short days. All right, what else do we want to look at? Dollar CAD. Let's just take a look there. Okay, dollar strengthening versus Canadian dollar. Canada had a miss on their employment report this morning. Now, the headline number actually showed improvement in the unemployment rate at 7.2% versus 7.4%, but they were expecting to gain 15,000 jobs, and they only gained 7. Why did the unemployment rate go up? Because the participation rate went down. Okay, they were expecting it to be at 67. All right, it came in at 66.8. There's the difference right there. So it looks like we've got dollar strengthening versus loonie. So big news this morning, obviously, is going to be the non-farm payrolls report here in the U.S. All right, we're expecting an additional 85,000 jobs to be added to the economy. All right, and so far all the data has been pointing down. But let's remember that now the bar has been set a little bit lower. The expectations are lower. Some of this is baked into the market. All right, do I expect that we're going to beat? Gosh, I mean, I'm from the contrarian nature that I have as a trader in general, I'd love to say yes. Okay, I'd love to see a 125,000 print come in, but all the data so far has been pointing to a lower number that I feel like it would just be capricious of me to say, to throw out a number. And everybody likes to throw out these non-farm payroll numbers reports, and trust me, I'm no different than anybody else. And when I used to work on the trading desks, all right, we always used to sit around, you pass the hat, you throw a couple bucks in the hat, you pick the number, whoever got closest would win the pot. And that's about as far as you can go with non-farm payrolls, trying to project this number. Okay, so you throw out a crazy number and you sound like a genius, and if it goes the other way you say, well, whatever. So I'm going to go on record as saying 125. I think it's going to be better just because I'm contrarian, and that's it. But all the data points to a lower number. So if the number does come in lower, what's going to happen? Well, that's another interesting story. All right, we know about slowing. We've got two things going on here with the dollar, and we've had the recent dollar strength happening. Okay, one of the reasons is that we're talking about structural issues over in the eurozone. Okay, people are talking about can the euro survive at these levels? Is the ECB big enough to bail out Spain, Italy, and all the periphery countries? I mean, now we're back to all five of the pigs. All right, at one point it was just the three little ones. Okay, now the three little piggies. That's pretty good. Now we're at all five again. So if it's a structural issue, then you're going to see a flight to safety going to the dollar. All right, but if the numbers come in here in the U.S. a little bit better than expected, is that going to be good for equity markets, which the dollar is going to go lower because of the negative correlation it has to S&P? Right? Or is it going to be a case where we want to see the non-farm payrolls report come in worse than expected, because that's going to increase the probability that Bernanke and the Fed are going to embark on QE3, and that's going to weaken the dollar, thereby driving money into stocks? Very difficult to say right now, and that's why this non-farm payrolls number is going to be very volatile. Okay, it's coming out in about 40 minutes time, 8:30 a.m. Eastern. Okay, just to show you real quick, gold actually sold off yesterday. I was a little bit surprised by that because it's safe haven property. Came off a little bit, but gold is bouncing back. All right, now gold we call as basically it's a hedge against inflation. All right, and it's sort of been acting as a safe haven currency. You can see right here on this chart, it was off yesterday. Well, I think right now people are more concerned that deflation is the bigger issue, so perhaps that's why gold sold off a little bit. But also there's some talk that we may be facing a liquidity crisis, and by that we mean when you talk about liquidity, it's actually having money. So people were moving to cash. All right, there was a lot of money flowing into the U.S. into dollars. That's that flight to safety trade, and it's kind of like you don't want to be stuck holding gold bullion if you need to go use cash to buy stuff. So there's a potential issue with liquidity. That's maybe a little bit further down the road, but you can see oil here. Look at this oil move, man. Oil right down to about 83, 82 and change before bucking back here. So we're probably going to get a bounce. All right, when I look at these charts, I see very, very oversold conditions. All right, from yesterday. Does that mean that that we can't go down any further? No, of course not. We certainly can, and we can be oversold for an extended period of time. But under normal circumstances, I see charts like these, okay, and I'm thinking these are buys. Okay, I'm thinking that it's oversold. Now, do I want to get in the way of this freight train and wait for this to happen? No, of course not. But what I do want to do is I'm going to wait for this non-farm payrolls number to happen. And what I'm guessing is that what may happen is that whichever way the number comes in, we're going to get the initial market reaction. It's probably going to be lower. All right, and then I'm hoping that we're going to see a bounce from there. So that's kind of what I'm waiting out and looking to do. Other than that, though, it's a Friday. Okay, with the problems in euro, it's highly probable that people don't want to go into the weekend holding risk assets. Although you got to remember that the markets have been down 8 out of 9 of the last, 8 of the last 9 days. So it may be down to levels where people are comfortable holding risk. So hard to say what's happening, but just be careful. 8:30 a.m. Volatility from non-farm payrolls report, and good luck, good weekend, and good trading to all.